All right, hello everybody. So my name is Kris Krane. Despite what this says, I'm not the CEO of either 4front or Cannex, but I am the president, co-founder of 4front Ventures. As it says here, we are a multi-state operator, but we really like to stress the O in MSO. We pride ourselves on our operations and really being operators, and we'll talk about that as we go through this here a little bit. Disclaimers. So there's been, some of you may be familiar with the news that we are in the process of merging with a company called Cannex out of the state of Washington. The combined entity, and we'll talk about this throughout the presentation, has an asset base that is rec-leaning. We have real battle-tested capabilities. We have a great leadership team. We have capital markets experience, and a realistic approach to growth and execution. And that's going to be a real theme to everything that we do here. But the thing that I want to stress in talking about this merger is that this has not been the typical kind of merger that we see in this space where it's, you've got these dots on a map and we've got these dots on a map and let's combine our asset portfolios and we're going to be a bigger company. Those mergers are fine, they make a lot of sense, it's not to knock that, but this has really been a merger of operational competency. And as you'll see here, at 4front, where we have really excelled in our history has been in navigating capital markets, in license procurement and acquisitions, and in running really great retail operations. Cannex, who is the largest wholesaler producer in the state of Washington in a hyper-competitive market, is known for excellent production and cultivation at scale. Frankly, we've looked at just about everybody around the country and we've not found anybody in the US who produces as efficiently at scale as Cannex and their subsidiaries in Washington State. And we think this combination of their efficiencies of cultivating and producing at scale with our efficiencies and experiences that we can provide in retail and our ability to go out and obtain licenses makes for a really great combination. So when we look at how capital markets have been viewing cannabis companies to date, we see it in three stages, and we're right now what we consider to be the second stage. So early on, it was about funded capacities and management resumes, right? In the early days of the industry, there weren't a whole lot of companies out there that had people with a lot of real world experience, right? There was a lot of sort of cannabis folks that were looking to get legit, and the companies that brought in really experienced management teams tended to get a leg up in terms of their valuations and the way they were viewed by capital markets. The phase that we're in today, and I think we're about at the end of it, is what we call basically monopoly. Companies are largely judged on the number of licenses that they have and the number of states that they're in, right? With not all states being equal, like a monopoly, having a hotel on Baltic Avenue is not the same as having a hotel on Boardwalk. But it really has been what we consider this game of monopoly. Gobble up as many assets as you can, put them all together, figure out how to operate it all later. We think that the industry is about to move into being judged more like a game of Risk. And we like this risk monopoly analogy because in monopoly, right, it's just about those assets and where those assets lay. In Risk, geography is important and where your dots on the map are important, but your execution is also extremely important, and your strategy is extremely important. And to date, most companies have been judged on some multiple of their projected 2020 EBITDAs and how many dots they have on a map. We're getting very close to 2020, where I would bet that most of those companies are not going to hit those numbers. And we're going to start moving into a world where companies are judged on their actual execution and their performance and their ability to hit their numbers. So for us, we're much more focused on sustainable growth. Not just gobbling up every license that we can, but really growing in a way that we are very proud of every operation that we put under our platform. So it means we may not wind up being the biggest company in the industry, but we are determined to be the best and the best operators in the country. So some common investor fears, right? What happens when flower commoditizes? Well, we think that's addressed largely by brands, right? Flower will commoditize, but brands tend to hold value. Can your management execute? And you'll see, we think we have a team here that can execute as well as anybody in the space. Do you have brands of value? Cannex has done that in Washington, and we'll talk through that in a way that I think very few have. Are your products any good? And do you manage scale? And that's something we've really placed a premium on, is being able to manage our growth and scale our growth in a way that we can be very proud of the operations that we're running. They're not just dots on a map. It's not just a license portfolio. So To speak to that, we talk about battle-tested capabilities. Cannex in Washington State, and we'll talk in a moment here, they are the largest wholesaler in the state of Washington in a hyper-competitive market. They have incredible yields at scale out of their 60,000 square foot facilities. They've got 20 brands and over 200 SKUs currently in the Washington State market. So folks come into Washington, go into a dispensary in Washington, they might buy a gummy, a mint, a chocolate, a pre-roll, all under different brands and have no idea that it all comes from the same company. In retail, we have placed a very heavy investment in our training platform and our training protocol. By way of history, 4front started as a consulting company back in 2011. We spent probably more time early on than and money than anybody in the early days putting together a very comprehensive suite of operational policies and procedures and a very comprehensive training program for how you run a high-end compliant dispensary. We worked with a lot of the early players in the industry to help them win their licenses and get up and running. And so we really honed these operations and honed this training program originally through consulting, and then in 2015 as we shifted to doing our own operations, to applying those to our own programs. And we've been iterating that training program now for, really if we go back to our first legacy company, back for about 10 years. And we've been very good at winning licenses and competitive application processes. We've won over 60 licenses, some on behalf of clients, some on behalf of ourselves, all across the United States. So I mentioned what Cannex has been able to do in Washington. They are the leading wholesaler in the state of Washington under their subsidiary, Northwest Cannabis Solutions. They employ over 190 people just in Washington alone, with a run rate of between $35 and $40 million. This is in a market where wholesale indoor pounds sell for about $700 a pound. That same pound in Massachusetts currently is selling for about $4,500 to $5,000 a pound, and are still seeing margins upwards of, still seeing revenue in the $35 to $40 million range. They're getting about 400 grams per square foot out of their version 2 cultivation facility in Washington, a little over 300 out of version 1 in Tumwater, Washington. So again, operational efficiency at scale. The folks at Cannex, and this is why we were so enamored with them and why we're so happy about this merger, which, knock on wood, should close next week, have spent a lot of time iterating and trying to figure out how you can be the best operator in a heavily competitive market. And we think that's extremely important because when you look at the state of the market in most of the places where the MSOs are based, these are limited license markets. And in these limited license markets, you don't have to be a great operator to get good market share. You just have to be good. In Washington State, where there's 1,000 licensed producers, or around 1,000 licensed producers, you've got to be a great and efficient operator in order to capture market share. And this team, led by Leo Gottmacher, they are operators. They run, before they got into cannabis, they ran the largest seafood processor business in the United States out of Seattle. So they understand efficiencies. They understand efficiencies at scale, operations, and how to iterate processes to literally shave every dollar off of production without sacrificing quality. So that has led to them having about an 8% market share in the entire wholesale market in Washington. Again, this is a market where there's about 1,000 licensed producers, where cultivators are going out of business because they cannot find buyers for their product. And this company has managed to capture 8% market share across their 20 brands and 300 SKUs in that heavily, heavily competitive market. And our thesis is, we have licenses, and I'll talk about this in a moment, we have licenses for cultivation production in states across the country, most of which are not nearly as competitive. We want to take that iterative process, that highly efficient production at scale in Washington State, and put it into Illinois, Massachusetts, Arizona, Michigan, other states where we have licenses or are in the process of acquiring licenses, and we think that will allow us to gain outsized market share where we're up against companies that have never really had to compete in a heavily competitive market. So this is just an example, some of the examples of their brands. I mentioned there are 20 of them that are currently in the Washington State market. Marma's down on the bottom. Their gummies is their best-selling product currently in Washington, but all of these sell quite well. And here's another example of all of the the products, the brands that are currently available under the Cannex banner in Washington, and we are currently in the process of taking these brands and bringing them to market in these much less competitive states that are typically dominated more by the larger multi-state operators. On the 4front side of things, we launched our Mission brand a few years ago. It is a customer-centric retail model. So while many have focused on building stores that look nice, we build stores that look nice and feel nice. It's really important to us that when somebody walks into a Mission store in Allentown, Pennsylvania, that they have the same feel and the same experience as if they walk into a store in Silver Spring, Maryland, or Worcester, Massachusetts, or Chicago, Illinois, all places that we have some operating Mission stores today. So we have 5 states where we have Mission dispensaries currently operational: Pennsylvania, Maryland, Illinois, Massachusetts, Arizona. We just completed an acquisition in Michigan, which will also be converting to a Mission store here soon. We should have 14 stores open by the end of this year. We have a number of stores that are currently built out in Massachusetts and Maryland, and others that are under construction in Pennsylvania that will be opening over the course of the year, and some others that we just closed on real estate on in a few of those states as well. So we should be up to 14 open by the end of the state. We expect to have a number more than that in hand by the end of the year. So I mentioned that we prioritize people, we prioritize community building. We really try and ingrain ourselves within the communities that we operate in. We do a lot of direct outreach within those communities. We participate in farmers markets and fairs. We go to senior centers and really try and ingrain ourselves into the fabric of those communities and become a welcome member of the community. And what that's resulted in is our stores tend to be market leaders. Our Allentown, Pennsylvania store, for example, when we look at the radius of patients, and this is in a medical marijuana market, of patients who are coming to our store in Allentown, they're coming from an extremely large distance, and they're doing so regularly. We have a large base of patients that regularly come up to Allentown from the North Philadelphia suburbs when they've got a dozen or more dispensaries that are a lot closer to them than Allentown, Pennsylvania. And the reason why they tell us that they're coming to us and they're driving 45 minutes out of their way is because they love the people that we employ in the stores. And this comes back to how we hire and how we train. So when we do an interview process, if somebody can't check off 3 boxes in the first 10 minutes, they don't move past the first 10 minutes of the interview. And that is, they have to be happy, humble, and hardworking. Right? And they have to love talking about cannabis, not necessarily in an evangelist type of way, but they have to love talking about it in a way that tries to help the patient or the consumer find a product that they're really going to love. And so if you look at the reviews that we get on places like Leafly or Weed Maps, what really makes me proud is that the theme that comes up over and over and over again are the people in those stores. And they all tell us they feel like family units, and when they go to one of our other stores, they feel like they're walking into a member of their extended family. And I've spoken with CEOs and COOs of some of our competitors, some of whom I have a great deal of respect for, and that's something they tell me they really struggle with, is how do you scale that culture? Right? It's not just about having a store that looks the same, but having the same culture amongst the staff in very diverse places. So I mentioned that we tend to hire from directly within the communities that we serve. And so the community that we serve on the south side of Chicago is very different than the community that we serve in Silver Spring, Maryland, or the community that we serve in Allentown, Pennsylvania. The people that are on staff, from the general managers on down, reflect the demographics of the community that we're serving, and yet you still have that same cultural feel from one Mission dispensary to the next. And that can really only be accomplished through very deliberative hiring and through this comprehensive week-long training program that we take every new hire through to make sure that they're fully bought in on the culture that we are trying to implement in each one of these stores. So I mentioned a little bit about this before, but as we complete this merger here over the course of the next week, we are already in the process of taking the well-iterated, highly efficient processes that Cannex has been operating and Northwest Cannabis Solutions has been operating in Washington State, and taking that model and putting it into Chicago, Illinois, into Worcester, Massachusetts, Georgetown, Massachusetts. So in Chicago, we currently have 4,300 square feet of flower canopy in a 12,000 square foot facility. We're in the process of expanding that out to 94,000 square feet with 46,000 square feet of flower canopy. This is a state where we're one of only 15 cultivators in a state of 13 million people. that is expected to go recreational, we hope, as soon as this year. In Massachusetts, we're going from what's currently I believe a 14,000 square foot footprint all the way up to about a 48,000 square foot footprint, which will give us about 34,000 square feet of canopy in our Georgetown facility and some more in our Worcester facility. And in fact, some of the team from Northwest Cannabis Solutions out in Washington have already moved out to Massachusetts so that they can full-time oversee the expansion of these projects in Massachusetts and Illinois. And we have recently gotten a license in Arizona, where we have a Mission retail store now open, was just converted to Mission, and we're in the process of securing some real estate there to build out that same kind of production facility in Arizona. We also have a license now in Southern California, where we plan to do production and bring these brands and this type of efficiency into the California market as well. And we're very close to obtaining a cultivation production license in Michigan. So Illinois and Massachusetts are our two priority states as far as our near-term expansion, but those other ones are coming directly on the heels of our expansion in Illinois and Massachusetts. So you can see here our asset base. We are, as soon as this merger is done, we will officially be in 9 states across the US, operational in 7 of them and operational in 8 by next month. So Washington, Illinois, Michigan, California, Massachusetts, Maryland, Pennsylvania, Arizona, and we don't have Arkansas on here, where we also have 3 dispensary licenses, the first of which is scheduled to open at the end of this month, which we believe may wind up being the first dispensary to open in the state of Arkansas. I mentioned proven management, proven experience. We're very proud of the breadth of experience that we've built amongst our management team. This is just a little bit of an example here. Josh Rosen, who is actually our CEO, came from the financial world. He was an analyst at Credit Suisse for many years and ran a family office out of Arizona for John Sperling, who was the founder of the University of Phoenix. Though some of you might be familiar with his name, that he was one of what we used to call the Big Four. Back in my advocacy days, there were basically 4 individuals that funded all of the early medical marijuana ballot initiatives, starting with Prop 215 in California. One of those was John Sperling from the University of Phoenix. The others, in case you ever played Drug War Trivia, were George Soros, George Zimmer from Men's Warehouse, and Peter Lewis from Progressive Insurance. And so Josh made the jump from running John's for-profit investments into cannabis a few years back, and joined us as he co-founded the company with me and joined us as CEO about 5 years ago. Leo, I already gave you a bit of his background. Comes from a family that has run one of the most impressive seafood businesses. I mean, they know operations about as well as anybody we've ever met, and you can see that in the way that they've built these Cannex assets. Andrew Toot was a small cap growth manager for BlackRock. David Kroom, CFO of Cannex, who's going to be joining us as CFO as well at 4front. Lisa Rosman has been our COO. She's going to be our Chief Growth Officer in the combined entity. Is probably the hardest working person I've ever met in my life, ever had to work with in my life, certainly. Glenn Bacchus was integral in building Trader Joe's and building the Trader Joe's brand. And he's now running Mission and bringing some of those same customer-focused, customer-centric processes and customer-centric philosophy that he helped build into Trader Joe's into our Mission stores. We're having our first Mission revamp is going to open when we go recreational in Georgetown at the end of this month. And we've got some really new and what we consider to be innovative for the space type of retail experiences that we're going to be working in Georgetown and then rolling those into our other Mission stores around the country. So you can see here, this is just a little bit about what our pro forma will look like post-merger. So you can see fully diluted shares, about 622 million shares, fully diluted Class A post-merger. We are currently technically trading on the OTC in the US. The CSE, our main stock on the CSE, is still halted pending the final approval of the merger, which we expect to be turned back on, we hope, next week. It's possible it takes another week or so, but Cannex shareholders are voting today to approve the deal. The 4front shareholders will vote next week, and we expect that merger right now. Our target date for full closure is 1 week from today, on the 24th. So we expect that trading will be back online. So you should be able to trade what is now Cannex. It will be rebranded as 4front. So I don't know what the new ticker is going to be, probably 4FRNT or something along those lines, but that should be trading sometime by next week. So in conclusion, again, we're really proud of the battle-tested capabilities that we have. We're a company that has really lived in operations and not in hype. We focus on efficient operations at scale, on cultivation, and on the best customer experience on the retail side of things. And when we look out at when the markets do adjust to really caring about operations and performance, if you have to think about where is this going to go at that point? There are going to be companies that have made the biggest bets and gobbled up the most licenses and aggregated the most licenses that will hit and will do well, right? They'll get bought by a private equity firm or hedge fund and will do quite well. But there are a number of others that are going to gobble up a lot of license and aggregate a number of licenses that are ultimately going to find themselves in a position where they don't really know how to operate this because they've focused so much on acquisitions and have not really focused on operations. And we think that we may not wind up being one of those biggest companies, but if we can be, and as we have been, one of the best and known for the best operations, we have two ultimate paths. Either we continue doing what we're doing, we run great operations, we get great market shares, and we run a great company, or one of these companies that winds up holding the bag and has a lot of assets that they don't really know how to operate, right? We're going to look very good to one of them as a potential acquisition target to help them come in and build a real operations platform around an asset base that they've built at that point. So we think we have a good exit strategy or a good strategy to operate a real company, because ultimately when metrics move from monopoly to risk and move from dots on a map to ability to execute, we think that we're going to be in a very good position to see some real gains in the market and be a highly valued company. So you can reach out to myself or any of my partners here if anyone has any further questions behind this, and I thank you very much for your time today.
Thank you very much for excellent talk. We are just starting a new company as a grower. What kind of help you can offer us or we can expect from you in growing or selling or whatsoever?
What state are you in?
Here in Toronto, in Canada.
So we are not currently doing anything in Canada, but if you reach out to me separately, we've got some companies that we do some work with and have some partnership with that may be able to help you with that. We need to talk a little bit more. It depends on what aspect of the business. So let's talk offline, and I can make some recommendations.
Anybody else? All right.
Great.
Thanks, Kris.
Thank you very much.